The stock market is closing in on another all-time high, but can this continue? In the short run, all sorts of things impact the stock market, like things happening in Iran or with Russia or with China or whatever. There's always something that's kind of taking the headlines, but in the long run, what ultimately drives stock prices is the underlying earnings of the companies within the stock market. And one of the biggest drivers of growth in the last few years, no one is going to be surprised by this answer, has been AI and all the spending around AI. Think about all those different big companies throwing money into AI investments. That's causing a lot of money to flow through the economy, which is stimulative to stock earnings. Taiwan Semiconductor, which is a manufacturing company that helps all the big chip manufacturers like NVIDIA and AMD and all these other big companies with manufacturing, actually put up some really incredible numbers here in this morning's trading session. You could see the stock has jumped another 6%. NVIDIA also moving higher on this. You have AMD, Advanced Micro Devices, another chip manufacturer, up 6% today. And here's a look at the VanEck Semiconductor ETF, ticker symbol SMH, which is also trending really sharply to the upside. So with continued spending expected for all of this AI investment build out, all the data center stuff, that's a ton of money and it's a ton of activity in the economy that seems to be buoying stocks higher. And while the S&P 500 is doing well, check this out. This is the RSP, which is an ETF that equally weights all the stocks in the S&P 500. Imagine you put $10 in every stock within the S&P 500 rather than putting like $80 into just NVIDIA or something like that. Well, this has actually been performing really well, and it's a good sign in my view to have more participation, lots of different companies looking on the up and up rather than just a couple or more narrow leadership in the stock market. We are seeing a lot of different companies actually putting up some really good expectations for this year. Another positive is that overnight we basically have seen oil prices drop pretty big today. We'll see if that can stay to the downside, but oil prices lower are typically good for inflation and also signals there's less worry about geopolitics a lot of times. So if the Iran situation can calm down, that's also a positive tailwind for stocks, and lower oil means lower energy costs. Lower energy costs, the theory is that's less inflationary. And by the way, less inflation means the Fed could continue to cut interest rates, which is like adding more money printing into an already active system. In fact, the lineup for stocks this year looks really good. Almost too good. In fact, one of my biggest concerns with the stock market right now is that everyone's bullish. Take a look at your investor sentiment survey here. The AAII investor sentiment survey asks a bunch of people, hey, what do you think about the stock market in the next 6 months? And we can see most people are saying they feel very bullish going forward. Stocks are valued very richly right now, and everyone seems to think they're going to move higher. Is that setting up for some sort of big disappointment this year? I don't know. Personally, I would be a buyer of dips if we saw a market pullback, but overall, things still look to be very strong for the markets. By the way, the tool that I'm using here is the Edge Finder. You can check it out if you head over to our website, a1trading.com.